something I think you see frequently in markets is volatility creates opportunities and it creates mispricing. And I think that's something we've seen a lot. We have a different rate and financing environment. Um, we've certainly seen, people have pushed out the story like, office is dead, and it's way more complicated than that, right? I mean, you've got the suburbs
Absolutely.
that seem to be doing well. You've got some regions, that are definitely doing badly, like, tech hubs, San Francisco, jumps out as not doing that well. But then, the property we have in the Savannah Charleston area, we like a lot. There's been regional variation. You take a look at like Manhattan, like Class A seems to be doing really well in office. Class B and C more challenged. Um, you take a look at retail is a great example, right? The traditional malls got a ton of problems, although really interesting redevelopment opportunities around prime real estate for it.
Yeah.
But then you took a look at other like the strip malls in suburbs are screaming well. Because people are now with e-commerce wanting short trips and remote work sometimes or hybrid work, wanting to stop from home. But it just seems that we've seen a lot of changes, pockets of strengths, pockets of weaknesses, and I would argue, when you get changes, you get mispricing. You get opportunities for people who really are following the trends, following what's going on, to identify mispricing opportunities and take advantage of that. Aren't we seeing some of this going on?
Absolutely. Same thing with like a wealth advisor. You gotta, some people are great at picking stocks and other people aren't. It's the same in real estate. Capital markets are perfect because they're imperfect. That volatility, market disorganization creates opportunity, and we are seeing a lot of it out there. Um, we've got a lot of different metrics that we use that kind of we feel separates us from the pack. And that's why when office was having struggles, our office properties thrived. And when multifamily is starting to struggle, our multifamily is doing better. So I think you're right. It has a lot to do with how you look at real estate, how you choose opportunities, and kind of separating yourself. Again, you threw a dart at the wall, and whatever you hit was going to do well for the last several years. And that's not the case anymore. And that's never how real estate's been. So you're seeing those trends reemerge, and that all this volatility, recession, interest rates, everything else that you and I have been discussing for months, that's really bringing back what real estate was. So I don't know if I answered your question, but I mean, that's kind of my opinion on it.
Yeah, I think this will be a topic we keep talking about, because a lot of these trends are still going. They're just still redefining the space. I mean, just the migration trends we saw spurred by COVID, the acceleration there was pretty huge from one state to another. The move to the suburbs seems a real thing. The days of you go to your cube and you work there, and then you go back from your cube, and then you go to the shopping mall and you do your shopping at the shopping, I mean, where there's like these really defined areas where you do all your activities. We've moved away from that, right? We've moved
Yeah.
to this more community-based things where you could end up. I mean, one of the big rages is or big trends is that multi-use stuff where you work and where you shop and where you play might very well be intermixed, and it's a lot of those properties that are really that kind of multi-use that we're seeing well. But whatever is driving it, it's definitely there, that we're moving to more of this mixed use, mixed activities, mixed spaces theme. I think that has a long way to run too.
One of the office towers that was just delivered in Bethesda, which is a local market that I'm familiar with, I grew up there, is a trophy asset. 215,000 square feet. You'd think that they'd have a problem leasing that up in this uncertain economy and office being bad. They're fully leased. They are fully leased with a wait list. And they don't consider themselves an office. They consider themselves a hospitality working experience.
Yeah.
That's exactly what they pride themselves on is the hospitality services they provide to your office to make your work experience not a work experience. So it's exactly what you're talking about, the ways that people are catering to people working, and we see it in multifamily and otherwise, but it's very interesting because of how everything has kind of transpired and where it's kind of going, you're seeing that start to break out and become front and center where it wasn't before.
I think this is a topic we're definitely going to be diving more into. But again, volatility and change creates mispricing opportunities, and I think that's the bottom line right here. Is we're seeing more of those opportunities as things change, and people struggle with how to identify opportunities and price them appropriately. Um,
Absolutely.
all right. Thanks a lot, Zach. Really appreciate it.
Take care, Steve.